Welcome back to the YouTube channel. Today's going to be a bit more educational, but this is going to be a super important video, especially if you're yield farming or you're investing or you're doing crypto or DeFi, and the recent market volatility has, for lack of a better term, kicked your ass, which I've been getting a lot of comments on Instagram. A lot of maybe panicked people, or not even panicked, just kind of anxious. And I totally get it. It is not easy. It's easy to be happy when everything is up and to the right. But when it's not up and to the right, I think most people are caught long and they don't believe in the fundamental assets, or they start doubting the future of crypto and DeFi. So this video, I hope, brings a lot of things together. I probably had about 10 or 12 questions I collected off of Instagram at Rubixinator, by the way, and I kind of filtered them down to these three things that I want to cover, that when the markets get volatile, you do this. Now, I always ask this question. It's one of my favorite questions to ask people when they're in doubt, or if they're in positions, or they're building a bull run bag, or just their portfolios are down, whether they're down 5% or 30%. I always ask, where do you think crypto and DeFi will be in 10 years? And beyond just thinking, based upon the research you've done, where do you think crypto, where do you think DeFi, what do you think will be the total value locked? When you look at your assets, like whatever you're holding, I'm just going to use Bitcoin for example, is it going to be worth more in 10 years than it is now? Our entire thesis, everything we've built, everything in the UIG, everything in Fast Track, everything we've ever talked about, and I've been talking about this for over 3 years, is it going to be bigger, more TVL, worth more adoption, more people, or is it going to be less? Because how you answer that will dictate the strategy you use when you're navigating these markets. Now, I am long-term bullish. If you've checked out the video from the last few days regarding delta neutral and making sure that you're hedged, you can short the markets. It all depends on how hands-on you want to be. There's a strategy for every market condition. Markets go up, you can make money. Markets go down, you can make money. Markets are flat, it's easy to also make money, but you can make money in any market condition. Now that said, from a cash flow perspective on the DeFi end of things, yeah, I highly recommend you learn how to use different strategies in different market conditions. But I'm always building a bull run. And when markets drop, I'm able to just buy a bit more of it. And I always tell people, I just fell asleep. If I had to go to sleep for 10 years and put all my money on something, and I didn't want to just store wealth, but I wanted to grow it, it would be in the crypto and the DeFi ecosystem. So with that said, again, how you answer this, and I'd love to know in the comments, how you answer this will really dictate what kind of investor you are, how long you hold on to things. Remember, it's time in the market. So enough of that. Let's have a look at number one. Invest in assets you want to hold long term. Even when I'm doing DeFi, when I enter a position, I am long the assets I'm investing in. Just in case I shoot out of range and there's a massive correction and I shoot out of range, I would be holding those assets anyways. Like, yes, unfortunately, you don't cash flow. Now, you can hedge against it. If you want to see that video, the Buffalo strategy, just let me know below. We're also creating more content around it. Like, yes, you can hedge against it, you can short it. But if I really mess that up, then I'd be holding this stuff long-term anyway. I invest in assets I want to hold long-term. If you spend 10 minutes researching what you're investing in and you're just chasing the yield, you're probably going to get hurt. Now, if you have spent a few hours and every week you revisit your thinking and your research around the assets you're holding and the positions you're in, then you're fine. I'm so long-term BTC that it's not even funny. And when I am yield farming BTC, which I'm in multiple positions, when I get kicked out of range on the bottom, I'm just buying more Bitcoin, which I would be buying anyways. It's dollar cost averaging back into Bitcoin at cheaper prices for me. Now again, we're talking level 1 here. There are ways to combat that, and there are ways that you can actually come out ahead, but just keeping it super simple. I'd be holding Bitcoin anyway. So please invest in assets you want to hold. As I go through these, please make a commitment. Hit the thumbs up or in the comments say, I'm investing in assets I believe in long term only from now on, so that if I do get kicked out of range or there's some unpredictable market correction, I'm holding assets I'd hold anyways. Number 2, the more volatile the markets get, the wider you go. Now, there are times in the market where support resistance are pretty tight. The assets are just kind of bouncing back and forth between support resistance. Things are pretty slow. Maybe there's even less volume pumping through the markets. Yeah, you can go tight. And obviously you're earning more fees for it. But when markets get volatile, to try to hold on to tight ranges, you are going to be locking in permanent loss and you're constantly going to be rebalancing. Just widen them out. Oftentimes, the volatility, aka the volume flowing through those pools, will more than make up for the widening of ranges. I would much rather get a lower APR, but be in range 24/7 rather than higher APR, tighter ranges, but I'm getting kicked out of range all the time. I'm always rebalancing. I'm locking in permanent loss. And it's just more hands-on, so I'm using more of my time. So remember, if you're in a BTC USDC pair and the price of BTC is going up, you're going to be converted into what? USDC. If the price of BTC goes down, you're basically dollar cost averaging or you're buying back BTC. You're going to be converted more into BTC. If you're investing in assets you want to hold long term and you have wide ranges, so your portfolio fluctuations don't really disturb you, you have wider ranges, so you're still making cash flow, and you can buy back even more of these assets at cheaper prices. Hit the thumb up if you're following along so far. Numero tres. Focus on asset accumulation and stay long-term focused. I'm so big on this. My portfolio value fluctuates all the freaking time. Sometimes I'm up a couple $100,000, sometimes I'm down a couple $100,000. But I don't really look at that because if I'm following rule number 1, invest in assets you want to hold long term, and I'm following rule number 2, which is setting wider ranges, then number 3 just becomes inevitable. I am just creating more BTC. I'm buying more BTC. I want to own more BTC this month than I did last month. And if BTC is worth $100,000 last month and it's worth $80,000 this month, then obviously the dollar value of my portfolio will have dropped. Let me know if that's making sense. But I don't just own 5 Bitcoin now, I own 5.1 Bitcoin or ETH or SOL or whatever your assets that you believe in long term and that you want to hold long term and you want to accumulate more of. That's 100% the name of the game. And the market is so backwards. This happens in real estate all the time too. Every time there's a recession and there's some brilliant opportunities to enter investments or stocks, like the exact time most people should be buying and entering and getting the most excited, they're running for the hills. And then when the markets come back and everyone's excited, then they're starting to spend all their money and invest all their money. And I'm like, it's such a deep human bias and I get it. But to me, the cheaper Bitcoin gets, that's like an iPhone being on sale. They never go on sale. Or a car. If I want to buy a Lamborghini for $350,000, all of a sudden it's for sale for $320,000. I'm going to buy 3 of them on leverage and I'm going to take the cash out because I know fundamentally they're worth $350,000, $380,000. If you tell me, hey, this car is worth $400,000, but I have to get rid of it and nothing is wrong with it, and I get it inspected and I could get it for $250,000, even if I had $1 to my name, I would reach out to everyone I know. I'd go out and knock on doors. I'd get the capital. I'd buy the car for $250,000, then I'd sell it for $350,000. And it's crazy to me how when things go on discount, everyone runs. As long as you're accumulating assets that you believe in long term and that you want to stack, you're actually making more progress in bearish markets or when everyone is running for the hills. You're just able to buy more of it. Every dollar buys you more of those assets. I think most investors in this space have such a short-term mentality. They want to get rich super quick and they don't care what they're investing in. They don't look at it. And to them, it's like a week or a month seems like forever. When I'm thinking years, if not decades. If you're thinking days, weeks, or even months, this market is going to kick your ass. If you're thinking yearly, annual returns, you are going to be a rock star in this space, but your competition is pretty much non-existent. 95% of this space, it's not competition. They're gambling and they're emotionally clicking buttons, and it's just like, ignore all that noise and stick to the fundamentals. If you want more videos like this, or maybe you want to look at some positions and how you can actually set wider ranges, how I think through a lot of that portfolio building, or if you want more strategies on how to navigate choppy markets, even bear markets, do let me know. We've got a ton of strategies that we use with clients and with members on how to navigate the markets and make DeFi cash flow no matter what the markets are doing. So do let me know in the comments below. With that said, I'm going to get out of here. Appreciate your time. Like and subscribe. And if there's anything else you need, do let me know in the comments or hit me up at Rubixinator on Instagram. And with that said, we'll see you in the next. Peace.